Hey, it's Colin, Mile High Monitor, checking in monthly as I tend to do, talking a little bit about September stats, as well as entering into the fourth quarter, market trends, opportunities, and what's going on in the Denver and Boulder homes market. Worth noting, I am separating out Denver Metro and then City of Boulder moving forward in these analyses, as I think while they are fair to lump together in certain regards, as the market shifts, I think it's going to be important to highlight some of the differences and really focus on certain markets in a more hyper-focused, hyper-local way. So you're going to get a Denver Metro focus and then a City of Boulder focus. Feel free to watch all, some, none, or both. Jumping into it. So City of Denver. City of Denver is trending with national trends where we're seeing inventory on the rise. We're seeing buyer demand deplete as evidenced with increased days on market, more inventory year over year. Average sales price actually ticked up both year over year. We have average sales price up 8% for single family homes. So we're talking about still a great return on investment. And it ticked up ever so slightly for the first month in 3 months with month over month. Average sales price ticked up from August to September, interestingly enough. I don't expect that trend to continue. I think that we're gonna see a continued retraction through the fourth quarter and into the new year. So, where I would be focused right now and what is very interesting that's going on in the market, of course, interest rates are very high, or at least when we talk about very high, it's very important to contextualize what we're comparing the very high to. We're coming off the lowest interest rate environment that we'll likely have ever experienced in the homes market, probably in the foreseeable future, unless there is catastrophic worldwide disaster as was the pandemic. So we're comparing the interest rates today to these ultra low interest rates that were in the past, and this has caused some volatility, some shock, and some pause on both sides of the equation. Naturally, as buyers start digging their heels in or pulling back, sellers are less likely or less inclined to start putting their homes on the market. So it's kind of a self-defeating prophecy in many regards with what I'm seeing happening in the market as people are pausing. Unfortunately, I think that this is not the best place or not the best strategy to entertain, especially on the buy side, because we've been in an extreme seller's market for about 2 years. Prior to that, we were in a very seller-friendly market for 5 to 6 years. We are in the first time since I've had my license, we are in a market where it is a buyer-favorable market. The only challenge on the buy side right now, or the only hesitation that I see is, of course, the interest rates being higher. So the cost to borrow is more expensive, monthly payments are higher, etc. There are solutions to this based on kind of how you negotiate deals. You can have sellers pay down your rate permanently or temporarily. And so this is happening more and more often. I can say that I closed a deal 2 days ago where my client had a 2-in-1 buy down, which is the first year the seller pays the interest rate down 2%, and the second year 1%. Third year it goes back to par. We can talk further about that if you have questions on how that's structured, but this is becoming more and more common to make these interest rates more palatable and help buyers enter into the market. The only thing that's holding people back is interest rates. So everything else is in your favor on the buy side. Sales side, keep in mind, we are still coming off these years of 18 and 20% appreciation, 2020 and 2021. So there's significant amounts of equity, and most people that are selling need to turn around and buy. So when we're structuring those deals, it's really advantageous to not have those be so imbalanced as they were over the last 2 years, where you would sell really high and then you'd have to buy high. Right now, great opportunity is really you're sitting on significant equity. You're able to still sell and capitalize in a very pronounced way there, and then turn around and buy and likely have some room for negotiation, or buy, I don't want to say low, but buy at a very reasonable market price. So, of course, I think there's opportunities in the market right now. I can say that for certain, On the buy side, I'm seeing tremendous amounts of negotiation happening. There are neighborhoods where one would have thought there was a certain price cap where you would never be able to get into it for, under $1 million, that now I'm seeing people get in there for under $1 million. So opportunities are abound. I'm always here to talk through questions, comments, concerns, strategies, helping you get to where you want to be. And I will talk to you next week. Take care. No, next month. Take care. Ciao.